All right, ladies and gentlemen, it's now time for us to move to the other big story that we're tracking here on the show. Well, while debt schemes staged a strong comeback, interestingly, AMFI data also highlights a surge in investor interest beyond traditional equities. In fact, gold and silver ETFs have attracted record inflows in January, and they've drawn a combined 33,503 crores. In fact, gold ETFs alone attracted 24,040 crores, nearly doubling December's 11,647 crores, while silver ETFs, they added 9,463 crores. As far as year-to-year date gold ETFs, those numbers are concerned, well, gold ETFs have amassed 61,000 crores, and that really reflects a strong investor appetite for the bullion. My colleague Mithali is now joining us with more details, and then we'll proceed with this chat with our expert who's going to decode all of these moves in gold ETFs. Take a look.
So gold is back in the spotlight, and this time the investors are voting in with the number of ETFs flows that we have seen in January. So gold ETF inflows have doubled in the month of January, surging to over 24,000 crore rupees, marking the highest monthly inflows ever in this category. What's striking is this: the gold ETF inflows are now on par with the equity inflows, a rare moment that underlines a clear shift that can be seen in the investors' preference. Also, the month-on-month gold ETF investments have jumped nearly 1,100% compared to about 11,600 crores in December. In fact, January has emerged as a standout month for the flows of ETFs overall, with the combined ETF inflows, with the combined ETFs and the overseas fund inflows nearly 40,000 crore rupees, and the gold accounting for a major share and chunk in the overall ETFs. The sharp price points out to strong safe haven demand as investors look to hedge their portfolios amid the global uncertainties, the market volatility, and also the elevated asset valuations.
Absolutely. Thank you, Mithali, for those insights. Now, joining us to discuss this, we have Naveen Mathur, Director Commodities and Currencies, Anand Rathi, Share and Stock Brokers. Mr. Mathur, so good to see you again. We just caught up on the sidelines of the India Investment Summit over the previous weekend, Mr. Mathur. In your recent panel at the India Investment Summit, you in fact discussed the buy on dips strategy. So is this staggered investment approach still the best way for individuals to build the gold and silver portfolio? If you can help us understand.
Yeah, exactly. And thank you very much for inviting me on the India Investment Summit 2026. As I mentioned earlier, my thought doesn't change, and neither the strategy change in terms of the fundamentals driving the gold. And what you have seen in the global demand on the ETFs, and particularly with India too, the data speaks of itself. I think the fundamentals still remain strong for gold. There are global uncertainties. The risk assets, therefore, would not do very well. The currency hedge as such, which offers the gold as a real hedge against inflation and currency hedge, the easy digital access, all those things makes gold, and particularly the gold ETFs, a strong choice. So I hold my point of view to the question of yours that do I still see the upside coming up in the gold prices? The answer is definitely yes. The central bank demand, the financialization of gold, particularly the global ETFs, I think the story remains pretty strong for gold up till and unless we don't see a major shift coming in from the risk assets.
Right, Mr. Mathur, let me ask you a follow-up question. You said that these levels are going to remain elevated. Could you mention these levels and what these levels, as far as gold ETF allocations, are going to be? What these ETF levels do you see over the next 6 months, and how much are these going to be?
Okay, so at the start of the show itself, you said about every numbers came up with a report on the MFI today. The India accumulated about I would say $2.49 billion worth of gold in just 1 month of January 2026. The 25 calendar year, the gold ETF in India accumulated approximately $4.67 billion. We have seen the gold demand in January double of what was December 2025, sorry. And that's been the first time. Now, it's a very tricky question, means all depends upon the monetary policy decisions, the Federal Reserve Chairman thoughts on that. Because what we see as far as the nomination is concerned, the president has nominated a Federal Reserve Chairman who seems to be hawkish. But if he takes a dovish stance, then the dollar would definitely depreciate against the six major currencies, and that would be something very positive for the gold prices on the upside. As of now, as we speak, the dollar price on the gold is approximately 5,080 per troy ounce. I would say that the downside range now is restricted at around 4,600 as we speak today. About 4,600 to 4,700 would be something that the downside risk is limited at. The upside depends upon where the economy, the global economy lands up, how the markets, particularly the central banks, continue buying to de-risk their dollar reserves into gold, and the global ETF. If these things continue to be positive, then the demand definitely would, I would say, would shoot up beyond even 5,000 tons, which we have seen in the calendar year 2025. So I am positive on the gold, but not so strong on silver because of the fundamentals, although the run-up has been pretty strong. But then silver would consolidate and gold would continue to be in a bullish territory.
On gold, but not so much on silver. But having said that, what specific indicators should, in fact, investor watch out for to manage the risk when it comes to silver?
I would say that there are very complex dynamics playing out today. That means it is just not like the previous years, which we used to say that India being the story for gold. Whenever the festival comes in, you buy gold, the prices would move up. So there are a lot many fundamental factors and a very complex dynamics of factors which are playing a very critical role. So I would say that the central bank buying would be one of the things which one should look out for. The second would be the global ETF demand, the investment demand across the globe. Third would be the geopolitics. If there is a negative tone to the US and the Iran conflict, then we might see gold touching back $5,200, $5,300 level. So I would say that the currency factor, the central bank, the investment demand in the global ETFs, the global uncertainty, and the interest rate regime and the inflationary concerns. I would say if we all are on tune to these complex dynamics, then one would be better off in terms of understanding gold.
Mr. Mathur, of achieving a $5,500 an ounce is achievable by the end of this year for gold?
No. I don't foresee those levels, subject to that the dovish stance of the central bank at the Federal Reserve particularly does not come into play. If the dovish stance comes into play, the dollar definitely would weaken, and that would have a very positive impact on the dollar-denominated commodities, and particularly gold in this case. But I would say that around $5,100 to $5,200 levels would be something that one should watch out for. $5,200 would be on the upside, but $4,600 and $4,700 levels on the downside. So kind of a close range as of where we stand today in terms of the fundamentals.
Thank you so much, Mr. Mathur. Thanks for joining us and sharing your insights on this.
Thank you.
On that note, it is time for us to slip into a very short break on India Tonight. You don't go anywhere. A lot of news to follow on the other side.